Everything has gone tits up this week after two banks ended up failing. We got a higher than expected unemployment rate, and Fed Chair Powell finally put 50 basis points back on the table. We started this week at $405.05. We went as high as $407.55 on Monday, but then we slid for the rest of the week down to a low of $384.32, and we ended up closing the week at $385.91. So overall this week we're down by 4%. But how did we get here? This all started with factory orders coming in on Monday, slightly better than expectations at negative 1.6% versus negative 1.8% expected. And this is actually down from positive 1.7% as of last month. And since this was in the negative, this is inflationary because whenever factory orders are going down, that means that less goods are being produced. And if demand is staying the same or going up because there's more money in the system, then the price of items is going to go up with that. So this was an inflationary report, but the markets took it at face value, coming in better than expectations, and ended up rising SPY to 407.55 on Monday. But then on Tuesday, Powell came out testifying in front of Congress, and in his opening statement, he said that if data suggests we are prepared to raise rates quicker, but no decision has been made yet. So he put 50 basis points on the table, sending the odds for 50 basis points from 30% before he said this to 70% in 24 hours. This ended up setting a new high for the dollar index, which ended up capitulating SPY. SPY ended up falling from about 404 at open before he spoke all the way down to 397 by the end of the day. But this wasn't the end of it. On Wednesday, we traded pretty flat because there wasn't really anything that came out of him testifying in Congress on Wednesday. It was just a bunch of back and forth between the Democrats and the Republicans and all of the nonsense of politics. But we did get the ADP non-farm employment change and JOLTS jobs report right before that, which were still showing a hot labor market, which we already know of. But the non-farm employment change came in at 242,000 jobs added versus 200,000 jobs expected. And this is up from 119,000 jobs added the month before. So this was a much higher non-farm employment change than what was expected, but since the markets were already selling off from Powell speaking on Tuesday, they didn't really have much more room to sell off. And then the JOLTS report, or the job openings, came in at 10.82 million versus 10.5 million expected, and this was down actually from 11.2 million jobs available last month. So the number of job openings is coming down, but this was still higher than expected, showing that the labor market is still pretty hot right now. And also on Wednesday, another big news piece that we got was Silvergate Bank, a crypto lending bank, ended up going belly up. They ended up liquidating their entire portfolio and they had to close down their bank. And they weren't the only bank to close down operations this week. We also had Silicon Valley Bank on Thursday, which we'll talk about. But first, let's talk about the initial jobless claims, coming in at 211,000 versus 195,000 expected. And this is up from 190,000 the week before. So there was 20% more initial jobless claims this week than there was the week before. And then the continuing jobless claims, or the total number of people that are unemployed, came in at 1,718,000, or 1.7 million versus 1.66 million expected. And this was up from 1.65 million the week before. So there was quite a bit of layoffs this week. And this was the highest reading that we've seen since December of 2022. And then the Silicon Valley Bank crisis kicked in. This actually started on Wednesday, where the bank was liquidating their bond portfolio of around $21 billion, and they ended up taking around a $1.5 billion loss. And in order to cover this loss, they were planning to do a sale of their shares of $1.75 billion. And this ended up causing panic. Peter Thiel ended up causing a bank run by telling everybody to pull their money out of it, and their stock ended up falling by 85% in the next 48 hours. So obviously they couldn't complete the share sale because their stock is basically worthless at this point. And anyone with over $250,000 in their account with SVB is over the FIDC limit. So this is uninsured and people aren't sure if they're going to get their money back. There's some major companies like Roku, for example, that have their money tied up in this bank. So this could be really troubling for these kind of smaller companies. And then on Friday, you had the average hourly earnings coming in at positive 0.2% month over month versus positive 0.3% expected. And this was down from 0.3% last month. So average hourly earnings did finally slow down for this month. And the unemployment rate actually finally ticked up higher at 3.6% unemployment versus 3.4% last month and 3.4% expected. So this came in unusually higher than expectations. But the non-farm payrolls was kind of the counterbalance to this, coming in at 311,000 jobs versus 205,000 expected. And this is down from 504,000 as of last month, which we all think could be a little bit manipulated, but there's no real telling with the BLS. And on top of all this confusion around the unemployment report, you had the continued fear of more bank runs, especially among regional banks. So the ETF KRE ended up falling by 4.5% after falling by 8% on Thursday. So overall, this was down about 12%. And SPY ended up falling another 1.4% after falling by 2% on Thursday, even when the dollar was coming down. So now, instead of getting the inflation fears, we're getting more of systemic risk or recession fears. And for earnings this week, I was only watching one particular stock, and this was Ulta, which came in a lot better than expectations at $6.68 earnings per share versus $5.57 expected. And the revenue ended up coming in at $3.23 billion versus $3.01 billion. So this was a double beat on earnings per share and revenue, and they ended up increasing their guidance better than Wall Street expected at 4 to 5% sales growth versus 3.8% expected. So this was a triple play, but they were already trading at all-time highs, so the markets weighed them down, and Ulta ended up trading flat. So that's the recap for this week, the earnings that I was watching and the macro events. So what's coming up next week? On Monday, hopefully we're going to get an update on SVB and what's to be done with the funds that were in those accounts, because Roku has $487 million of cash saved up in SVB. I think that Roku could see a decent sell-off unless there's some sort of clarification that everybody is going to get their funds back, but we're not sure on this. And then on Tuesday, we're going to have CPI coming in at 8:30 a.m. So this is the big event of the week. This is expected to come in at 6.0% year over year versus 6.4% as of last month. And the month over month reading is expected to come in at 0.4% increase versus 0.5% last month. If CPI comes in higher than expectations, this is going to cause more fear of the Fed continuing to raise interest rates when we're having the fear of all these bank runs as well. So this could be a pretty tough pickle that the markets find themselves in on Tuesday if the CPI comes in higher than expectations. And then if CPI comes in lower than expectations, that could be a little bit of a relief for the market. But the dollar would come down, which could also mean that SPY would come down if things aren't cleared up on Monday. And then Fed Bowman is coming out to speak at 4:20 p.m. on Tuesday. I'll be interested to see if Bowman says anything about this bank crisis or not. And then on Wednesday, we have the PPI coming in at 8:30 in the morning. So this is the producer price index instead of the consumer price index. And this is expected to come in at 5.4% versus 6% year over year as of last month. And then the month over month rating is expected to come in at positive 0.3% versus 0.7% as of last month. Then core retail sales is coming in at 8:30 in the morning, which is expected at positive 0.2% month over month versus 2.3% as of last month. And then retail inventories is expected to come in at positive 0.2% versus 0.2% as of last month. The producer price index usually ends up getting passed down to the consumer price index because producers are paying more for their goods, so they're going to pass that cost down to the consumers. So if this comes in higher than expectations, that's more inflation fears. And if it comes in lower than expectations, then the dollar should come down, which usually would mean that stocks would go up. But it really depends on if we still have that systemic risk fear on Monday, and if that's clarified. And then you have core retail sales. So this is basically just showing you how much people are shopping now versus a month before. This is expected to come in at just positive 0.2% versus 2.3%. Since it has been a little bit colder up here in the Northeast, this could slow down sales for the month of February, but not really sure here. But if this does come in higher than expectations, that's inflationary. If it comes in lower than expectations, disinflationary. And finally, retail inventories This is basically a proxy for the amount of supply that retailers have. So the higher the supply that they have, the more that they can reduce prices in order to get items off of their shelves. But if this comes in lower, negative, that means that they have less in stock, which means that they can raise prices to add more things to their shelves. That's Wednesday for you. And then we have initial jobless claims coming in at 8:30 on Thursday. And then the Philadelphia Fed manufacturing at 8:30 in the morning as well. So the initial jobless claims is expected to come in at 205,000 versus 211,000 last week. So this is expected to slow down a little bit from what we saw, but if this continues to come in higher than expectations, this could spark more recession fears to come. And if it comes in lower than expectations, then I think it could quell those fears. And then the Philly Fed manufacturing index is expected to come in at negative 14.5 versus negative 24.3 the month before. And this is a proxy for our supply chain. So if this continues to get worse, then our supply chains are getting worse. This would be inflationary if it comes in worse than expectations, and disinflationary if this somehow comes in positive, but I'm doubtful for that. And then finally, the Michigan Economic Report is coming out at 10 a.m. on Friday, where the consumer sentiment is expected to come in at 67 versus 67 as of the last report. And then the inflation expectations came in at 4.1% at the last reading. So if this continues to go up, that means inflation is being entrenched into the minds of consumers, which means that psychologically prices are going to continue to go up because people are buying things now in anticipation of those prices rising for those goods. And then for earnings, I'm only watching 2 stocks for this week. I'm watching Adobe on Wednesday, March 15th after hours, where their earnings per share is expected to come in at $3.68 and their revenue is expected to come in at $4.62 billion. And historically, they've done $2.93 average earnings per share, while their revenue has come in at $4.18 billion as of the last 8 quarters. And then if we look at previous quarters, the last quarter they did $2.78 earnings per share and $4.53 billion in revenue. And a year ago, they were doing $2.77 earnings per share and $4.26 billion in revenue. And then for FedEx, they're reporting earnings on Thursday, March 16th after hours. Their earnings per share is expected to come in at $2.64 versus $3.18 last quarter and $4.59 a year ago whenever gas prices were super high. And their average earnings per share over the last 2 years has been $4.47 per quarter. And then the revenue is expected to come in at $22.76 billion for this quarter versus $22.81 billion last quarter and $23.64 billion a year ago. And over the last 8 quarters, they've done an average of $22.93 billion in revenue. But how are these stocks going to trade? Let's check out our technical analysis. For SPY, this is expected to be in a range of about $13 in either direction, putting us between $374 and a top of $398. We have some supports at $381.81. We have the mother of all trend lines right below that. And then we have $373.44. So if SPY is not able to hold above $386 by the end of the week, then they will be closing below the line that everybody's been watching, which would be negative for the market. But if it's able to close above 386, then it would be holding the line, and that would be positive for the market. And then for resistance, we have $389.75. We have $395.25. And finally, we have $399.03. And one more support that we have that I forgot about was a $380 price level, which is a Fibonacci retracement stemming from the bottom of the COVID lows to the top of the bull market highs. So that's definitely going to be a point to watch out for. And then for Adobe this week, the expected range is between $305 and $353, or a move of about $24 in either direction. We have supports at $317.87 and $305, and then we've got resistance at $343.93, $365.61, and $391, which is very high compared to where it's trading right now. But if we're looking at my estimates, if they beat on the earnings per share and they beat on the revenue, this could be going above $340. If they beat on the revenue but miss on the earnings, this could be coming in above $320. And then if they miss on the revenue, beat on the earnings, they're probably going to stay above $315. And finally, if they miss on both their earnings and their revenue, this could be going below $310. And then for FedEx, their expected range is 188 to 214. Their current supports are at 197.50, 189.61, and $180.50. And then for resistance, you have 203.22. 209.28 and 215.12. If they end up beating their earnings and then beating their revenue, I think this could go above $205. If they beat their earnings and miss their revenue, they could be staying above $198. If they miss on their earnings but beat on revenue, they could be staying above $195. And finally, if they miss earnings and miss revenue, they might be headed below $190 by the end of the week. So that's my price analysis for you for the earnings that I'm watching for this week for SPY. Hopefully this video was helpful. If it was, show some love, leave a like. Thanks for making it all the way to the end of this video. And thank you to all my patrons, my channel members. And as always, remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.